Oil prices fell by more than $5 a barrel on Thursday on reports that US President Joe Biden could order the release of 180 million barrels of oil from the country's strategic reserves. Brent is trading at around $107 a barrel and WTI at $101 a barrel after slipping as low as $100. Concerns over supply constraints have also been eased due to a slowdown in China's industrial activity. Factory output shrank in the world's second largest economy in March. Meanwhile, OPEC and its allies are convening today to discuss global oil supplies. The International Energy Agency and others have been calling on the cartel to raise output faster to help rein in inflation. For more on this now, let's go to David Madden, Equiti Capital market analyst. Many thanks for being with us today. So first of all, a plan to release 1 million barrels of oil per day for a few months from the strategic petroleum reserves. What difference is it going to make, really, on the supply side of things?
To be perfectly honest, in the grand scheme of things, probably not a huge amount. It's already been forecast that because of the disruption and the sanctions imposed on Russia from April, later on this week, it's believed that output on the global oil market is going to decline by 3 million barrels. So even though an increase of US strategic reserves by 1 million barrels per day, you're still talking a deficit of 2 million barrels per day. So it's not going to have a huge impact in terms of immediate supply and demand. But what it does do is it sends out a very important message to Russia and the overall energy market that the United States is willing to dip into its strategic petroleum fund, which is something it doesn't really like to do. And it also sends a message that if they're prepared to do it on this occasion, they might well be prepared to do it on further occasions. And with that will take some of the heat out of the oil market, because for the last few weeks and months, all that have been dominating the headlines has been very much concerns about supply. So if anything, the signaling about this move is probably as important, if not more important, than the actual logistics and the increase in supply of 1 million barrels of oil per day.
Definitely a strong signal there. And I mean, David, we've seen extreme volatility, especially in these past 4 days in oil prices. What are you expecting from the OPEC Plus meeting, not only from the meeting and what they will, decide, but also on the impact on oil prices?
Once again, I don't think we're going to see a huge amount, anything particularly new from OPEC Plus, even if they do come under political pressure from the likes of President Biden to try and ramp up production. It's worth noting that in February, they missed their planned production target by around 1.05 million barrels of oil per day. So in the last few months, OPEC Plus have been making a concerted effort to increase output, but they're not even hitting their own targets as of yet. So I don't really see how, realistically speaking, they can actually all of a sudden ramp up production so greatly that not only will they actually match their current target, they'll actually intentionally exceed that as a way of actually flooding the market, or as to say, with oil and a bid to actually take the price down. Now, there's a fine balance going on here. The major oil producers want to keep the price of oil relatively high because it's in their interest. But at the same time, we've been talking about high levels of inflation around the world. Various pockets of the world are experiencing slower growth. We could potentially be in line for a global recession in the next few years. The major oil producers want to be careful how they make their next moves. If they intentionally keep the price of oil too high for too long, that can impact actually demand for oil, and in turn that can actually bring about actually kind of a global recession. Because if inflation continues to be high, interest rates are going to be raised, and putting a brake on the economy by raising interest rates could ultimately impact demand for oil in the long run.
David Madden, many thanks for your analysis this morning.
Thanks.